kind of, for the most part, speak for themselves. They're just looking at your average loan amount that's going to be, for the most part, Sacramento area, $202,000. 30-year fixed rate is typically at 4.25%. You're going to be, with your buy down rate, anywhere between 2 to 3%, depending on what the par rate is at that day. You're going to knock it down to almost 3.75%. Your monthly payment is going to be $935. So what you're looking at is your total interest paid over the life of the loan is $134,000. Comparatively to the slide right before that, if you look at the regular 4.25%, your total interest paid over the amount is $155,000. So you've got about a $20,000 difference over the life of the loan. But more importantly, too, is you have your actual monthly payment. And from the lending side, what I see the biggest difference in is that's going to be what I consider the optimal pricing for your client, as opposed to what they actually want. Meaning, you will probably be able to bump them up a little bit, maybe $20,000 to $25,000 for the home that they actually want. And I think that's a key, because that's where you're given the most value. Because there's so many times that as a lender, I have people that come and qualify, and they found a home at $204,000 that they want to buy, and they qualify for $180,000. Okay, so the best thing that you can do as a realtor is give them value and say, hey, you know what? Why don't we talk about the KW stimulus package, and let's see if we can still get you that property. And then once they know that they can buy that rate down, that will give them that extra $15,000 to $20,000 that they'll be able to bump up to the house that they really want. So, and including, you look at a lifetime savings of $20,000, $959. $20,959. So it ends up being a good deal all the way around. They get the house that they want, they get the savings that they want, and everybody walks away winner.
Okay. Now, Lori, Chris, can you move forward on the difference between the credit for the tax credit versus what this does for them? Because one of the key points that you had mentioned was the fact that really, honestly, what ended up happening with the tax credit is that money seemed to go back in the pockets of the bank.
Right. What happened back in April, because of the tax, that's when the tax credit was rolled out. And what happened was the bank saw that the interest, there was going to be more demand out there. They raised the interest rates from 5% to 5.5%. So it cost the buyer $22,000 more over the life of the loan. And when you take out the tax credit of $8,000, the buyer still lost over $14,000.
Okay.
So and with our rates being lower now, and then the buy down, we can actually save them over $34,000 on a $200,000 loan.
Okay. So there's a substantial reason why they should be going for this program and getting out there buying now versus in April.
Yes.
Yeah.
When everybody else is out there buying.
Absolutely.
Right.
One, I think that with inventory right now, we do have an abundance of inventory, and we don't have a lot of competition.
No, that's right.
So what we used to be dealing with was a lot of competition, which made buyers frustrated and us frustrated because we were out there writing several offers, where now we have the opportunity to go out and kind of have a pick of what we want for our clients and not have all that competition. So, and again, this is not specific to a property. So if a house has this on it or doesn't have it on it, if you propose this to a listing broker, a listing agent, you could sell this to them.
Well,
and
we can do
negotiate
this on
it.
Remax listings, Century 21,
absolutely.
Wyatt. We can do this on any listing out there.
Right.
It's not specific to the KW listings.
Absolutely. So this is a great time for you guys to get involved. We understand that we're doing a lot in a short amount of time, but we're ready to help you guys. We're ready to help you guys go out and do great business for December. Chris is like poking at me. So anyways, we hope everybody joins in with us, and if you have any additional questions, please ask Lori. Thank you very much.